Yeah, so there is the perception out there that HELOCs are more risky than mortgages. And here's where they think that is number one, because of interest rate. They think because the interest rate is variable, when we hear variable, automatically we think it goes up. But what we also don't think about variable is it goes down. And we've had a couple markets. We have markets where interest rates go up. We have markets when interest rates go down. You look at 2020, what happened? Interest rates plummeted. So you get some more efficiency there. But people are really scared with having a variable interest rate, and most HELOCs have a variable interest rate. Not all, though. Some HELOCs do have a fixed rate. Some have what we call a hybrid, which means a portion of it is fixed and a portion of it is variable. So it depends on what you perceive as risk. In my opinion, what I think is the riskiest thing to do is a guaranteed loss. Like, Derek, if we said, let's go to Vegas and you play this game and it's guaranteed you're going to lose money, are you going to play? The answer is no. Okay, what I can tell you for a fact, mathematically, is that a mortgage is a guaranteed loss. There's nothing riskier than that. So what's there to lose by just looking into the math of this? And you'll actually see that there's far less risk on the HELOC side or the line of credit side than there is on the mortgage side, because you have liquidity. Liquidity can solve risk issues, right? If something happens, transmission goes out. Now, you want to pay extra on your mortgage and whatnot, your equity is locked up, but the transmission goes out, you can't tap into it when you need it the most, at least not quickly. In a line of credit, you maintain liquidity, therefore those things don't happen, where you can't get the transmission fixed, and maybe you miss a couple days at work, and next thing you know, you get fired from a job. That, again, there's all kinds of issues that I find with a mortgage, but there's nothing riskier than a guaranteed loss, and that's what I call a mortgage.